Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Hello everybody, this is Coach D from TackleTrading.com, here to talk to you about a 50-day moving average, also known as a 50-period moving average. Now let's start with the question, what are simple moving averages and why do traders put them on their charts? Well, there's lots of different kinds of moving averages. We're going to talk about the 50-day moving average, but first of all, simple moving averages are simple price trend following indicators. They overlay right on top of the price chart, and it simply averages out and smooths out the data. And it can help us to identify and confirm price trends simply by following the actual price. The moving average gives us an idea of what the trend is if we can't already see that. It can help us identify a change in trend when we see the prices violate moving averages and move above or below them. And they can also be used as catalysts for support and resistance. Traders will see the price drop towards the moving average and then reverse back up or back down, depending on, they call it bouncing on the moving average. And those are the primary uses. Now, a simple moving average is a very simple calculation. It averages the closing price or the last traded price over the specified time frame and then plots it on the price chart. So in the example of a 50-period simple moving average, the indicator, what it does is it adds up the closing price of the last 50 periods and then divides the sum by the same 50 periods. It's moving because it adds new data and drops out the old data from the equation, and then it plots the 50-period data on top of the price chart and updates with each new period. So you can see I've got a price chart here of just typical candlestick chart, and what you see highlighted here in blue is 50 periods of data, and you'll notice that right after the 50 periods of data, the green plot, the moving average, starts to plot on the chart. So as each new piece of data comes in, that plot's going to update, and it's going to add the new candlesticks, the new closing price in, and it's going to drop off the old closing price. And you'll notice that as the price chart moves, and here you got a nice significant gap up, the moving average didn't move up that much. It moved up as the new closing price is factored in, but because it's factoring in 50 periods of data, it's going to lag behind that move. So every day that it comes in, you'll see new price plots come in. And this is a daily time frame, and so we're looking at each day new data comes in, and that moving average follows that price. So as the price of the stock continues to rise, the moving average continues to climb, and so that's typically what we're looking for. As we can see, we're clearly in an upward price trend. The 50-period moving average is following suit. And again, as prices change directions, you'll notice the prices dropped for several periods, and that 50-period moving average kept on climbing because, again, the average data is still climbing. And so here would be an actual example of what might be a catalyst. The price gets down to that 50-period moving average, and sometimes traders will identify this as an area where there might be a buying opportunity, and it can be a catalyst for buying activity. And there you go, just like that, the price started to come up and move up, and so that would be considered a moving average bounce. Although technically it's just a line on a chart and the data came down to that dispersion point where the 50-period moving average is, you can see that would be a buy opportunity. Now, if we're to violate down below that, that could be an indication that the trend is changing. So now, as the price kind of rode up above that moving average there, and violated down below, that could be an indication that the trend is changing. And as the data goes lower and lower, you see that price slope change. Now, it doesn't define the trend, but it can be used to help us gauge the direction of the trend. So as price starts to move more sideways, you see the moving average move sideways. If I change to a weekly time frame, you'll see the same basic scenario here, except for instead of averaging out the days, it's going to average out the weeks. So here's that same 50 periods of data over in the blue box. The moving average starts to plot on the chart, and as prices move up, you can see the moving average follows, and here's a really good example of a price trend violation right here. Let me go throw on my crosshair so you can see that. And that could be a very strong indication of a change in trend. Here's another good example of a 50-period moving average bounce when the price crossed back up. That could be a confirmation of upward trend. And this works on any time frame. Down here I've got a 30-minute time frame, and you can again see 50 periods of data calculates. The moving average starts to plot. As prices move up above the moving average, that could be a strong signal of uptrend. Here's an example of a moving average bounce. Let me turn on my crosshair so you can see that. A moving average bounce. Here's an example of a violation to the downside. And again, you can see that moving average simply follows the price and it plots the data, hence the name simple moving average. To learn more about 50-period moving averages and all technical analysis, all things trading and investing, visit us at www.tackletrading.com. You can follow us on social media, Facebook, Twitter, Instagram, and YouTube. And we have our very own social media clubhouse that you can join for free by visiting our website. And join our community of active traders and investors with professional coaching where we make this happen every day.